So in today's video, I'm going to be showing you guys a new strategy that is almost guaranteed to work every single time. Now, this strategy involves using RSI, also known as the relative strength index, as well as the Bollinger Bands, which I'm going to be explaining to you guys in today's video. Now, if you guys aren't familiar with Bollinger Bands are bands that act as support and resistance in the market while it is currently moving, similar to moving averages. Now, when it comes to RSI, also known as relative strength index, it basically just tells you if the market is being either overbought or oversold, allowing you to play reversals. Now, first up, what we're going to want to do is head over to the trading view charts and head over to indicators and then type in RSI. Now, once you see relative strength index, you're just going to click on it and it should add itself to the chart. Now, for the second indicator, we're going to be using Bollinger Bands. Now, what you guys are going to want to search up is BB. And you should see Bollinger Bands at the top. Now you just want to click on that and it should add itself to the chart. Now, as you can see, the two indicators like this aren't really exactly optimized. So now what we're going to do is head over to the setting tabs for the Bollinger Bands and change the length from 20 to 30. Now you guys are going to want to make sure that the standard deviation is set to 2 because anything higher or lower could cause inaccurate take profits or stop losses. Now we're going to head over to the RSI and go over to settings. Now here you're going to see a plethora of information that you can add. However, we're just going to want to head over to the inputs and make sure that the RSI length is set to 13 and that show divergence is checked. Now you guys are going to click OK and now we're good to go. Now, the way the relative strength index works is if the value is over 70, then the market is currently being overbought, meaning that there's a high chance that market is going to go down. And if RSI is below 30, then there's a high chance that the price is going to go up as the market is being oversold. Now, the way the strategy works is around something known as mean aversion. Essentially, the SMA band that's in our Bollinger Band acts as a mean aversion area, meaning that price likes to stick to it. Now, when looking at the charts, as you can see right here, price gapped up above our Bollinger Bands and the RSI gave us a signal that the market is being overbought. Now, since this is above our 18 simple moving average line and due to mean aversion, that means that there's a high chance that price is going to trickle back down to our moving average. Now, as you can see here, the price and the market was being overbought. And as you can see through mean aversion, it ended up trickling down to our 18 SMA and then eventually to the bottom of our Bollinger Band. Now here's an example for our bullish scenario. As you can see, price made a low right here and RSI gave us an indicator that the market is being oversold, meaning there's a high chance for price to reverse back to the upside. Now, as you can see here, we gapped below our Bollinger Band and below our 18-day moving average, meaning that everything is set perfectly. Now, if we entered our trade right here and made our take profit to the SMA, you guys could see that we would have made a 32% profit. Now, if you guys enter at the bottom of the RSI before it started diverging back into the middle zone and you exited at the 18 SMA, you guys would have made a profit of around 27%. Crazy, right? Now, when does this strategy not work? Now, the problem with indicator-based strategies is that indicators are lagging indicators, meaning they establish after a move has already been made. Now, the problem with this is that indicator strategies usually only work in trending markets, and it fails to work when price consolidates and moves sideways. However, here's a quick strategy and a better strategy than the one I mentioned before to play this during trending markets as well as sideways markets to make sure that you guys always make money. Now, if you guys take a look at the charts right here, you can see that the price made a low and then proceeded to make yet again another low. However, when we look at our RSI started off with a low and then made a higher low, causing a market divergence. Now, when there's a market divergence, chances are there's going to be a reversal to the opposite side. Now, in this case, if we see a bullish divergence in the RSI and a bearish divergence in the price, this is perfect confirmation and a very high likelihood that the price will continue to the upside. Now here, as you can see, if we entered once we got the bullish signal and made sure to notice the bearish divergence in the market, we could have played up to our SMA and made a profit of around 17%. Now again, this works in sideways markets and also trending markets, making this the perfect strategy regardless of how the markets are doing. Now, I hope you guys did learn a very unique and interesting strategy using the Bollinger Bands and the RSI. And if you guys are interested in learning more advanced and higher win rate strategies, along with live trading signals and mentorship every Monday through Friday, make sure to check out the links in the description to my free Discord and my membership access in order to become the profitable trader you aspire to be immediately. Thanks for watching, and I'll see you guys in the next video.